Thank you, everyone that joined. Good morning to everyone that's joining from Latin America. Good afternoon to the rest of the world. Welcome to our webinar called Introduction to the 2020 GIPS Standards. I'm Alejandro Ibarra. I'm a board member of the CFA Society Mexico and a partner in the financial advisory practice at Deloitte based in Mexico City. And I will be moderating this session today. We have a very interesting session prepared for you today with the presence of distinguished speakers that will share their perspective on GIPS with us. I would like to personally thank you for the time and effort everyone has put together in preparing this session and for taking the time to being with us today. We will, Diego, can you please put up the presentation on the agenda slide? We will start with the panel with a general overview to the global investment performance standards, and this session will be presented by Ken Robinson, who is a director of the Global Industry Standards at the CFA Institute. We know that the GIPS standards is a subject that is not widely known across Latin America. And that's one of the reasons that we prepared this session, and Ken will give us a good introduction that hopefully will be very useful, no matter what your previous GIPS standards knowledge or experience might be. Yeah. We know we have a lot of CFAs that have studied the CFA program, and probably the GIPS part was the most tedious one to go through, but bear with us today, and I'm sure it will become a lot clearer, and some of your questions will be answered, and especially with the panelists that we will have later on today with real life experiences on how they have implemented this globally. After Ken's presentation, we will then move to learn about two impressive North American pension funds and their experiences with the GIPS standards. This discussion, I think, it will be particularly relevant for our audience that work in pension funds, such as the Afores in Mexico, any regulators that we might have present, and also alternative investment sponsors that tend to raise capital from these pension funds and other asset managers that work with them. We're honored to have Simon Fulto, who is a vice president of valuation and performance at Cdpq. And Simon, I'm not going to try to pronounce the whole Caisse du Placement, but I'll leave you to it. And we also have Matthew Lipowski, who is the Chief Investment Officer at PRIM, which is the Massachusetts Pension Reserves Investment Management Board. Finally, we will hear the perspectives of a global asset manager and how they have implemented GIPS across different jurisdictions, including LATAM countries such as Argentina, Chile, and Mexico, and presenting will be Nicolas Berenguer, who is the Global GIPS Officer at Santander Asset Management. We have left some time at the end of the presentation for a Q&A session with all of our panelists. So please feel free to submit your question to our panelists throughout the webinar via the Q&A button here on your screens. And we will circle back to all your questions at the end of all the presentations today. And last but not least, we will have Melvin Escudero, who is the chairman of the Advocacy Council for LATAM and the Caribbean at the CFA Institute, and he's also a CEO for El Dorado Investments based in Colombia. He will offer us some final remarks to close the webinar. So if you'd like to start with your presentation, we can go through the introduction. Thank you, everyone.
Sure. Thanks very much, Alejandro, for that great introduction. I'd like to thanking the Atlantic Islands and Latin American Advocacy Council for having us today. It's a real honor to be with you all today. And thanks in advance for Diego to taking care of the slide deck for everyone. So next slide. Great. So what are the GIPS standards? The CFA Institute Global Investment Performance Standards are an investment industry standard for both calculating and presenting historical investment performance. Internally, here at CFA Institute, it's viewed as one of the more successful things that we've done, in that 24 of the top 25, 39 of the top 40, and 89 of the top 100 global investment management firms, either in whole or in part, have chosen to comply with the standards. Though that sounds pretty impressive, I don't want you to think that the standards are just meant for the larger or more well-known investment management firms. In fact, over 1,700 organizations being both firms and asset owners across 49 markets or countries, if you will, have chosen to claim compliance with the GIPS standards. CFA Institute just doesn't put together the GIPS standards ourselves. We do it through the help of a lot of outside parties, including our GIPS standards volunteers. We have numerous GIPS standards committees that are comprised of investment managers, asset owners, consultants, legal folks, verifiers, and other service providers that devote their time to provide input into the development of the GIPS standards. By the way, if anyone has an interest in volunteering, please don't hesitate to reach out to any of us. We also rely on what we call GIPS standard sponsors, which are comprised of over 60 not-for-profit organizations around the world. GIPS standard sponsors play an incredibly important role in the development of the standards by providing technical input from a local market perspective, as well as promoting the GIPS standards in their particular region. And we'll talk a little bit more about who the GIPS standard sponsors are in a couple of minutes. I think most of you all are familiar with CFA Institute. We're a global association of investment management professionals. We're independent, we're a not-for-profit organization. We don't profit off the GIPS standards, and we believe we're best suited to come out with industry standards where needed, and the GIPS standards are an excellent example of that. So by establishing standardized requirements for calculating and presenting performance, the GIPS standards make it possible for prospective investors to compare the performance of one or more managers for a given strategy, so that prospective investor has confidence that they're comparing apples to apples, if you will, as opposed to apples to oranges. It also provides greater confidence that when a prospective investor, and even a current investor, when they're looking at the investment performance for that firm or asset owner, that performance is calculated correctly and has all the disclosures within that presentation that should be there. And we'll talk a little bit more about asset owners throughout this presentation. Next slide, Diego. Here are some of the main reasons why firms choose to comply with the GIPS standards. It demonstrates a commitment by the firm to follow global industry standards and global industry best practice for valuation, performance calculation, and performance presentation, which also demonstrates a commitment to consistent, transparent, and comparable methods of calculating and presenting investment performance. It requires the establishment of robust policies and procedures, which often improves the internal control environment, which in turn can cut down on errors down the road. It's also one of the first questions investment managers often see in an RFP, a request for proposal. They often see the question as to whether the firm is GIPS compliance in due diligence questionnaires and asset manager databases as well. In fact, some asset owners and their consultants require compliance with the GIPS standards for many of their mandates, and we'll talk about that later today as well. Next slide, please. So I mentioned GIPS standard sponsors earlier. Here's our listing of our current GIPS standards sponsors. We have quite a few great GIPS standard sponsors in the Latin American region. Hopefully we'll have more in the future. That includes CFA Society Brazil. I'm really pleased and excited to announce that we now have a GIPS standard sponsor in Chile, CFA Society Chile. Alejandro mentioned, and he represents CFA Society Mexico, which is another long-time sponsor of the GIPS Standards and a big promoter of the GIPS Standards. And Melvin, as you all know, is from Peru, and we've got two great organizations that work together in Peru to promote the GIPS Standards, and that's Pro Capitalis and CFA Society Peru. If any of you out there is from a particular country or a region and you have an interest in putting together a GIPS Standard sponsor in your particular jurisdiction, don't hesitate to reach out to any of us, and we'd be happy to chat with you. However, I do need to say that if you're a firm or an asset owner in a particular country or region where there is currently no GIPS Standard sponsor, that doesn't mean you can't comply with the GIPS Standards. In fact, many firms around the world, regardless of whether there's a GIPS Standard sponsor in their country or region, claim compliance with the GIPS Standards. Similarly, you don't need to have a CFA charter holder on staff or a CIPM designation holder on staff in order to claim compliance with the standards. Next slide, please. Okay, so the latest edition of the standards is what we refer to as the 2020 edition of the GIPS Standards. The prior edition came out 10 years ago. That was the 2010 edition of the standards. So why did we want to update the standards? Well, the obvious reason was we wanted to incorporate all the new items that we've been adding over the last 10 years, but we also wanted to accomplish a number of things. Particularly, we wanted to make the GIPS Standards relevant for all asset classes, particularly the alternative investment asset class. Great levels of compliance in the traditional asset class around the globe, not as much on the alternative investment area historically. So we spent a lot of time working with our volunteers who work for alternative investment management firms, as well as speaking to alternative investment management industry associations to get their feedback as to what we could do better with respect to alternative assets within the GIPS Standards. And we've incorporated that feedback into the new 2020 GIPS Standards. We also wanted to better address pooled funds within the 2020 GIPS Standards, and we've done that. We now have separate provisions for pooled funds, some of which we'll talk a little bit about in a few minutes. In addition, we wanted to better address the applicability of asset owners. In the prior edition of the GIPS Standards, there was actually one book or one edition, if you will, and asset owners had to kind of figure out which of the provisions were applicable to them and which were not. And so now we have separate books or chapters, if you will, of the GIPS Standards, one specifically for firms, the Global Investment Standards for firms. Now we have a Global Investment Performance Standards for asset owners. And now for the verifiers, we've consolidated all our verification guidance in one place. We've updated that guidance, and now we have our Global Investment Performance Standards for verifiers. The GIPS Standards themselves, as well as all the guidance that's available, such as the GIPS Standards Handbook, which I'll touch upon later today, is available on our website, gipsstandards.org. All the materials are available free of charge to download. If you're old school and you'd like a copy of the standards or the handbook, you can order it through Amazon for a nominal charge, and the link is on our website. Next slide, please. Okay, I'll next be talking about some of the fundamental principles and high-level requirements of the GIPS Standards. And I'm going to start by talking about the GIPS Standards for firms. And so one of the basic requirements for the GIPS Standards for firms is that when a firm first gets into compliance with the standards, they have to go back 5 years. So you have to have a track record of at least 5 years of performance in order to get into compliance with the standards. The exception to that is if your firm or particular strategy has been around for less than 5 years, you'd only be required to go back through inception. So in a GIPS report, and we'll talk a little bit more about GIPS reports later, in your first GIPS report, you'll present at least 5 years of annual performance, and then every year thereafter, you'll add a year until you get up to 10 years. Once you have a 10-year track record, you'll either show a rolling 10-year track record going forward, or you add on to that each year and show a much longer track record. Next slide. In terms of fundamentals of compliance, one of the requirements of the GIPS standards is that a firm must have documented policies and procedures, basically what you're doing regarding compliance with the GIPS standards, and those must be applied consistently. Your GIPS standards policies and procedures manual doesn't all have to be in one document. Many firms refer to other documents that already exist and available within the firm. Some of the examples of the policies and procedures that would be included in such a manual would be accounting for investments, things like purchases and sales, valuation, meeting the GIPS standards requirements, and that type of thing. So it's also a good opportunity to toughen up or put together your policies and procedures if you haven't done so already. The next bit has to do with laws and regulations. We believe the regulatory aspect of investment performance is very important. So we've got a couple of provisions that we've built into the GIPS standards. We state that compliant entities must comply with all applicable laws and regulations regarding the calculation and presentation of performance. And also, a compliant firm must not present performance or performance-related information that's false or misleading. And these two items are with respect to not only a compliant firm's GIPS reporting, which we'll talk about in a few minutes, but also any performance that they present outside of the GIPS report. And that's because, we don't want any firm to be associated with the GIPS standards that's not meeting their laws or regulations or doing things that are false and misleading. To the extent there is a law or regulation that conflicts with the GIPS standards, I've never seen that, but that's theoretically possible. The compliant firm would be required to comply with that particular law and regulation, and they would just disclose the conflict in the GIPS report. Typically, what I see is the law or regulation may be more stringent or less stringent than the GIPS standard, but there's typically not a conflict. We're also seeing, particularly where I reside in the United States, more of the regulators referencing the GIPS standards within their own regulation, such as the SEC or FINRA, which regulates broker-dealers, again, where I reside in the US. Another key requirement that we have in the GIPS standards is a record-keeping requirement, similar to what a lot of regulators have. Basically, kind of like it sounds, a compliant entity must have supporting books and records for all the investment performance, as well as the related disclosures that they would include in a GIPS report. Next slide, please. So I mentioned earlier that we now have separate provisions for pooled funds within the GIPS standards. And in order to make that work, we now have defined two types of pooled vehicles within the GIPS standards, a broad distribution fund and a limited distribution fund. A broad distribution fund is probably like it sounds. Think of like a mutual fund in the US. They're often what's called 40 Act mutual funds. Typically, lots of investors, not as sophisticated investors, and not a lot of contact, if any, between the investment management firm and the prospective client or the investor. However, there's typically a lot of rules and regulations on the regulatory side regarding performance reporting and just reporting in general in terms of what needs to be included in that reporting and when that reporting needs to go out to investors. Kind of the opposite of that. So for a fund that's not a broad distribution fund, we characterize that as a limited distribution pooled fund. Think of that in terms of like a hedge fund or a private equity fund. So typically a lot of interaction between the prospective investor and the investment manager. Could be a high investment minimum to come in, typically sophisticated investors, and typically not a lot of regulation in terms of what needs to be in your reporting and when that reporting needs to be provided to the prospective client. So for non-pooled vehicles, we refer to that as a segregated account. We used to call those separate accounts. Same concept. Those are single portfolio types that are managed typically for one single client. So those are the three portfolio types. Next slide, Diego. Great. So a composite is an aggregation of all portfolios that are managed to a particular strategy. And so all your discretionary accounts, including assuming the segregated account isn't non-discretionary, would be required to go into a composite, and the GIPS compliant firm would present the performance for that strategy or composite, if you will. There's no requirement that a composite contain more than one portfolio. So to the extent you only have one portfolio managed for a given strategy, then you would just have one portfolio in the composite. And so I mentioned we now have separate provisions for pooled funds. So if a pooled fund is also marketed as a strategy, so you have that same strategy in a separate account, or you're offering to have that same strategy that you're managing the pooled fund in a separate account structure, then that pooled fund would need to go in a composite. However, if you're just marketing that pooled fund as a product and not a strategy, you're not offering it as a separate account, then you would not need to put that pooled fund into a composite. And that's a big change that we've made and included in the 2020 edition of the GIPS Standards. Next slide, please. And so the next, this slide talks about GIPS reporting. We used to call that GIPS compliant presentations. Now that we have two types of GIPS reports for firms, we refer to that as GIPS reports. So we now have a GIPS composite report for the composite structure and a GIPS pooled fund report for the pooled fund structure. Within the GIPS standards themselves, we have lots of guidance, and at the back of the book, if you will, there are appendices. Appendices A and B have numerous examples of GIPS composite reports and GIPS pooled fund reports. You'll see part of an example, the first page. Typically, these are about 2 pages long. On the right-hand side of the screen, typically, you'll have a chart where you present, at a minimum, your annual returns for the composite or the fund. You'll present that on a gross and or net of fee basis. You'll also present a benchmark return and your fund of composite assets, as well as your firm assets. Within the GIPS provisions, there are required disclosures and recommended disclosures. And like it sounds, required are the things that you must put in the GIPS report if it's applicable, and recommended are those items that are deemed to be standard industry practice, but they're recommended to be included, but not required to be included. Next slide, Diego. Great. So now that a firm has prepared their GIPS reports, what do they do with it? Well, the GIPS standards are meant more for prospective investors rather than current clients. So think of advertising or prospective client reporting as opposed to client reporting. So for composites, you must provide a GIPS composite report to a prospective client as soon as they become a prospective client. The wording that we use is firms must make every reasonable effort to provide a GIPS composite report to all prospective clients when they initially become a prospective client. If you're just meeting with a party and you're not sure that they're interested, what they're interested in, or they have the ability to invest with you, then they don't meet the prospective client definition, and you wouldn't be required at that point in time to provide them the GIPS report. On the pooled fund side, the form of reporting depends on the type of pooled fund product. Let's take the last one first, broad distribution pooled funds. So again, think mutual funds. Because these are typically highly regulated around the world, we do not require that GIPS pooled fund report be provided to prospective investors of that broadly distributed pooled fund. But a firm can still not only prepare that broad distribution pooled fund report, but provide it to a prospective pooled fund investor. On the limited distribution pooled fund side, so again, think, for example, closed-end real estate fund, private equity fund, hedge fund report. If that particular fund is in a composite, the firm has a choice in presenting to that prospective investor either the GIPS composite report or the GIPS pooled fund report. If that particular limited distribution fund is not in a composite, then the firm would make every reasonable effort to provide the GIPS pooled fund report to that prospective investor of that limited distribution pooled fund. Next slide, Diego. Great. So then this slide talks or speaks to the calculation methodology requirements within the GIPS standards. Generally, a time-weighted return is required. However, we've heard from many managers over the last 10 years that they wanted the ability in specific circumstances to provide a money-weighted return, basically a since inception IRR return. So we've now built that out within the 2020 edition of the GIPS standards. So more specifically, if a firm has control over external cash flows, and by external cash flows, I mean the money coming in or out of the portfolio or the fund, typically in a private equity fund, or yeah, let's stick with private equity, the GP, the general partner, is going to control when the money from the limited partners can come into the fund, and they control when the money is distributed back to those limited partners. That's an example where the firm has control over external cash flows. So if you meet that requirement and then just one, not all, but one of the following, closed-end fund structure, fixed life, fixed capital commitment, or the majority of the investments are liquid, then when you're presenting the performance in the GIPS report, you can present only money-weighted returns or both money-weighted returns and time-weighted returns. And when I say money-weighted returns, that's typically going to be since inception IRR returns. Next slide, Diego. Great. So I'm going to take a couple of minutes to talk about asset owners. We've got some asset owners who are going to be speaking to you today. So I really look forward to their presentations. But when we speak to asset owners, like it sounds, we're talking about entities like public and private pension plans, endowments, foundations, family offices, and those types of entities. So we're referring to the organization as opposed to an individual. Typically, not always, but typically an asset owner is different from a firm because a firm has prospective investors that they're always touting, whereas an asset owner typically does not have prospective investors. They're typically reporting to an oversight body or board of directors. And so if that's the makeup for one of these types of organizations, in order to when it complies with the GIPS standards, it would adhere to the GIPS standards for firms. I'm sorry, the GIPS standards for asset owners. If, and this doesn't happen often, but if it were to compete for business more like a firm, then the asset owner would adhere to the GIPS standards for firms. But most asset owners adhere to what we now have as the GIPS standards for asset owners. Thanks. Next slide. Okay, so asset owners, as you hear a lot about today, will play an incredibly important role in the process of the GIPS standards. So investment management firms interact with asset owners either directly through the RFP, request for proposal process, or through their consultants. And as I mentioned earlier, many asset owners will ask about GIPS compliance in the RFP or through their consultants. And investment management firms really don't want to answer no to that question, as it's looked upon as an important item as part of the manager selection process. And in fact, we're looking for more asset owners around the globe to inquire about the GIPS standards, raise the bar, if you will, to the extent they use third-party managers. However, an asset owner can also claim compliance themselves, and many do so. And we'll learn more about that from both Cdpq and MassPrim in a few minutes. Next slide. Great. So where we had a GIPS report for firms, as you can imagine, we also have a GIPS report for asset owners. This is referred to as a GIPS asset owner report. So this wouldn't be for a composite, rather this would be for what we call the total fund. So the total pool of assets that's managed by that particular asset owner. So think the investment side of the pension plan, if you will. We made a pretty big accommodation within the 2020 GIPS standards to get more asset owners on board. We heard earlier that when a firm first comes into compliance, that the firm needs to go back at least 5 years in order to get into compliance, unless the firm has been around for less than 5 years. On the asset owner side, the asset owner needs to go back only 1 year in order to get into compliance with the standards. So on the asset owner side, there's really no minimum effective compliance date like there is for firms. And we're hoping this makes it easier for asset owners to get into compliance. And based on what we're hearing in the marketplace, this has been perceived very favorably by the asset owner community. Next slide. So in the appendices to the GIPS standards for asset owners, just like firms, we have numerous examples by asset owner types of what a GIPS report looks like. This is an example of a GIPS report for an asset owner of the total fund. Similarly, just like for firms, you'll see the returns for the asset owner. For the total fund, we require that a net return, net of all fees and expenses, be presented. You also see a benchmark return, and then other additional items such as the assets of the fund as well. Next slide. We're often asked for examples of asset owners that comply, so I put together some representative asset owners on this screen. These are probably the more well-known asset owners that comply with the standards. On our website, gipsstandards.org, you can see a list of asset owners that comply with the standards. Unless a particular asset owner has opted out, most have not. You'll hear later, well, actually in a few moments, from both Cdpq and MassPrim. Cdpq in Canada is a longtime supporter of those GIPS standards and has claimed compliance for many years. MassPrim is a longtime supporter as well. In Asia, the very large insurance company AIA claims compliance with the standards. In Europe, a great example is Norges Bank. In the Middle East, a great example is the large sovereign wealth fund, SAMA. And we're also very pleased that the United Nations Joint Staff Pension Plan also now claims compliance with the GIPS standards. And more coming, we know of a lot of asset owners that are looking at the GIPS standards, and hopefully we'll have some more to add from the Latin American region and the islands region going forward. So the next slide is on resources. The most important thing I want to say on resources is feel free to reach out to any of the speakers today, to the extent right after the webcast or at any point thereafter, even a year from now, when you're watching this. If you have any questions about the GIPS standards, we're here to help you. Our contact information is on one of the slides later on in the presentation. We have a GIPS standards website, gipsstandards.org, that has lots of technical material that we're always adding, lots of implementation guidance, lots of technical guidance to help you get into compliance with the standards, lots of promotional types of resources as well. We do conferences. In fact, we have a GIPS virtual conference coming up on October 26th and 27th, which is our annual conference. We have a help desk, which is basically an email box, gips@cfainstitute.org. If you have any questions on the GIPS standards or just any questions on performance in general, feel free to reach out to us through that email box, and we'll try to get back to you within 2 to 3 business days. We also have a very popular newsletter that well over 20,000 people subscribe to. You can access that. It's called the GIPS Standards newsletter on our website, gipsstandards.org. And there's also information on how to subscribe to that newsletter. The newsletter is available at no charge. In the appendix to this presentation, I've included additional resources, since I can spend an hour just talking about all the resources that we have available to you. So feel free to take a look at the appendix on your own time. And we'll make the slide deck available to everyone after the presentation. And so with that, thank you very much. And I'd like to hand it over to Simon from Cdpq.
Sure. So hi, everyone. And thank you, Ken, and thank you to Alejandro. Thanks also to all the local CFA societies for having us. So maybe just a bit of a context. My job at Cdpq is to manage the performance and valuation teams. I'm now also managing our annual GIPS compliance process. And a quick overview on our firm, Cdpq. We are managing assets on behalf of 40 different clients, mainly they're asset owners, so mainly public retirement funds and insurance plans. Total asset under management is now around if we can just go to next slide, please. Thank you. So total asset under management is now around $400 billion Canadian or $315 US. The head office is located in Montreal, Canada, but we have a global presence with 10 international offices spread in the US, Europe, Asia. We also have one in Mexico City and one in Sao Paulo. Next slide, please. So we're managing a well-diversified fund across most asset classes. You can see here that we have a large portion allocated to less liquid asset classes like private equity, real estate, and infrastructure. Those three asset classes amount to about a third of the total fund. I'm mentioning this context because I think it's useful to know when we're going to be discussing a bit further on the GIPS compliance. And I should also say that Cdpq manages around 90% of our assets, internal assets, both private markets, and the remaining 10% is allocated to multiple funds and external managers across the major asset classes, mostly in public and private equity. We're also awarded a AAA credit rating for our debt issuing program. Next slide, please. We have a fairly strong presence in Latin America that has been expanding quite fast in the last few years. Total fund exposure is only 4%, but that still amounts to around 16 billion. So that's quite a few assets. In Mexico, our mostly we have large infrastructures in transport and renewables. You can see some of those here on that page. In Brazil, some large exposure in real estate and in gas infrastructure. And we have other investments across LATAM, like government bonds in Colombia and Peru. Next slide, please. So all of this allocation and global footprint, this all amounts to basically at the end of the day performance. We're showing a total fund return of 8.5% over the last 5 years. And going back to GIPS, it is to at the end of the day calculate and communicate accurately those performance numbers and much more information that those standards are such a useful tool for us. Next slide. So this is the context of calculating and presenting, communicating, and making sure that the interpretation of performance is done right at Cdpq. I wanted to take some time to present the investment context, just because it shows that the complexity that the performance team has to tackle and to communicate accurately. Of course, there's performance in the portfolio, there's calculating benchmarks, and all the other information related to performance. So that can amount to lots of information to tackle, and GIPS is really providing a great framework to do this by the right and with the best practices. So in short, we have a very extensive performance history spanning over 50 years. We have multiple clients with specific policy and benchmarks. There's global geographic exposures, including currencies. There is a performance and attribution that is done on all major asset classes, daily, monthly, periodic reporting. And of course, we have the GIPS compliance that is an annual. So this reality is correct, and at Cdpq, we're not alone. We're like most Canadian and international pension fund managers. We fit very well within the CFA Institute definition of asset owners, which is basically any organization that invests on behalf of beneficiaries and that is accountable to an oversight body. And that oversight body is responsible to set investment policy and monitor performance. Next slide, please. Just a quick note on the history of compliance at Cdpq. We've been compliant for 20 years now. We started in 2002 when GIPS were first called AMER PPS and were more focused on the North American market. And in 2006, we adopted the global standards. And just last year, we updated our compliance to the new 2020 standards. Also helping CFA Institute in that process with the review and the comment of those new standards. Next slide, please. Great. So I think Ken touched a bit on that, but basically the question is why comply with GIPS and more specifically, why asset owners find value in complying with the GIPS standards. So for us, as I mentioned with the history of GIPS at Cdpq, asset owners have always been able to claim compliance with the standards, but just because GIPS standards were originally designed for investment managers, many asset owners were not aware that the standards could apply to them or struggle to understand how to work with the provisions not originally designed for them. And then many asset owners are invested directly or indirectly in private assets like private equity, infrastructure, real estate. So sometimes evaluation frequency, the GIPS status of external managers, and custom benchmarks can be perceived like obstacles to adopting the standards. But now with the GIPS 2020 and a dedicated book to asset owners and specific provisions, adoption is much more easier and offers specific benefits. So first, for us, first benefit is the compliance with GIPS is really helping to make sure performance is complete and fairly represented. Then it demonstrates for us a commitment to follow the global industry standards and the best practice for valuation, for performance calculation, and for performance presentation as well. And that part on valuation is very relevant to Canadian asset owners who typically invest in large allocation in private assets, as I mentioned. And we all know fair valuation is crucial to get representative performance. So it's very helpful for us to have the GIPS guidelines tying evaluation to performance. Another benefit that is that compliance requires establishment of robust policies and procedures around performance calculation. So it really allows management to be extremely confident about performance numbers, and it also gives an additional level of confidence to the board and to clients. And finally, GIPS compliance for us, it demonstrates the commitment to adopt the same principles that may be required of external investment managers that we are selecting. And I'll touch just a bit more on this later. And I can add maybe a last point. From my experience, the adoption of GIPS is helping as well to create a solid culture and knowledge about performance in the organization. For us at Cdpq, asset managers portfolio managers, the rest of the other sectors like risk, like client relationship. Everybody knows we're GIPS compliant, and it really creates a coherent discussion about performance. It's helping on benchmark selection, on compensation programs, on assessing the success of investment strategies. And I should also note that for asset owners, GIPS compliance can be quite simple. Reporting on the total fund performance and not every single asset class. On our side, if you look at our GIPS compliant reporting on our website, we report on all single asset class, but with GIPS 2020 for asset owners, that is not required. And once the initial lift of becoming GIPS is done, maintaining compliance usually streamlines very well with existing process, controls, and documentation. At Cdpq, we also chose to go through the recommended GIPS verification process annually, which for me is just a great way to get external view on the standards and cohesion of our methodologies, process, and documentation. So I often get the question, what does the verification process looks like? And it will, of course, vary from firm to firm, but on our side, verification usually integrates very well with the existing controls and documentation. We also spread the workload between Q4 and Q1 to help manage the balance between GIPS verification and year-end reporting process. Next slide, please. So as I mentioned before, GIPS is also a useful tool during the selection process of external managers. It can mention that external managers and asset managers will find that GIPS is providing an edge when during the selection process, and this is what we're finding ourselves. For us, for Cdpq, the screening of GIPS and GIPS verification when we're looking for public equity managers is really a time saver. This is something that is built in our selection process. I would say it is not always required, and I'll explain a bit why. But the PM team will work with the consultants to screen for compliance to GIPS and often GIPS verification. That will give us confidence in the performance numbers, and that will give us confidence as well on the use of best practices in performance calculation and other processes within that external manager, like benchmark selection, just an example. Comparing GIPS compliant firms, it also provides a more comparable ground to help with selection process. And to help with the quality and speed of due diligence. So it's really something that is helpful for us, and it's a added value for any firm that we will look at. But as I mentioned, requiring GIPS is not always possible, just because adoption is not equal across managers. Just an example, GIPS is not as well known in the hedge fund industry. Or in private equity space. It's the same situation sometimes we find in smaller firms, maybe that are specific to one strategy or specific to focus on one country. But as adoption increases, we think that firms will see the competitive edge that being GIPS compliant is providing to stand out, and asset owners will benefit from a more comparable level playing field in performance reporting. So hopefully this gives a pretty large context on why we decided to be GIPS compliant at Cdpq. A bit of information on the process of becoming compliant and staying compliant. I will end there, but I'm very happy to answer any questions further on in this discussion. thank you. I think, Matthew, this is your spot.
Yep. Thanks. Good morning, everyone, or good afternoon, depending where you're viewing this from. I'm incredibly honored and happy to be here to participate in this great event. Hopefully everyone's enjoying and finding a lot of value in the discussions thus far. I know I have, and I want to thank both Ken and Simon for their fantastic presentations so far. My name is Matthew Leposki. I am the Chief Investment Operating Officer at Mass Prim Board, also known as Prim. In my role, I oversee all items investment operations related, and that could be investment manager operational due diligence oversight, investment manager onboarding, legal, structuring, investment manager compliance, investment reporting, including today's topic, which is investment performance reporting. I've been at Prim for roughly 8 years. Prior to joining Mass Prim, I have 10 years in investment operations with experience at a large custody bank and a large insurance company. Now, I want to give a brief overview of who Prim is, what our structure is like. This way, it's going to give everybody a solid understanding of how we went about becoming Gibbs compliant and why we felt it was important to us. So Mass Prim is the pension fund for the Commonwealth of Massachusetts. We were formed in 1984 to invest the pension assets specifically for Massachusetts state teachers and Massachusetts state employees' retirement systems, as well as other cities, towns, and municipalities' pension assets across the state. Now, we don't manage the benefits ourselves. That is done by the individual retirement system. We merely invest the pension assets. Assets under management as of June 30th, 2021 was roughly $96 billion. And, for a firm our size, we're fairly lean, right? Again, $96 billion in assets, and, a head count total at Prim is roughly 60 individuals. So again, a very lean staff. Individuals wear multiple hats, but a great place to work. Now, Prim staff collaborates internally and brings recommendations forward for investment committee and our board to identify investment managers to invest in across a variety of asset classes. We have exposures across all major asset classes: global equities, fixed income, value-added fixed income, private equity, real estate, timberland, and portfolio completion strategies, which is more of a catch-all or a hedge fund-like investment strategy. And from a reporting perspective, Prim has a master custodian, and they are our primary book of record, both from an accounting perspective, but also from a performance perspective. So this isn't handled in-house. We do track and value all of our private assets in-house, but from a reporting and official book of record standpoint, our master custodian handles all of that. And our books are valued on a monthly basis. That's also important. We are not daily valued, it's monthly. This is also important for our participating systems that are investing in on a monthly basis. We do have access to daily marks, and that's more for the liquid assets that we are able to get the daily pricing. And we use that more just from a risk attribution and analysis standpoint. Next slide, please. Thank you. So here is a quick snapshot of our overall annualized gross performance over relevant time periods, as well as giving a snapshot on the bottom section here of what our asset allocation looks like as of June 30th, 2021. Now, Prim doesn't have specific asset allocation targets. We would rather have ranges, and that's what you see on the right-hand side of the bottom half. And this is determined annually during our asset allocation review. As you can see, Prim is a very diversified asset owner with roughly 40% of our investments in alternatives, such as private equity, real estate, portfolio completion strategies, and timberland. As I mentioned earlier, Prim is, for the most part, 100% externally managed by outsourced investment managers. As such, due diligence on the investment managers is extremely important, not only from an investment perspective, the IDD, but from an operational perspective as well, the ODD. During all initial investment manager screenings, PRIM performs both IDD and ODD, regardless of the asset class. This deep dive from an IDD and ODD perspective gives PRIM as much detail and complete picture of our investment managers. This allows us to identify areas of concern or areas that we can work with the investment manager to amend or work towards a resolution. On an ongoing basis from an ODD perspective, PRIM sends along an annual operational due diligence questionnaire, also known as an ODDQ, which really highlights from the manager to PRIM any key changes of controls, staffs, counterparties, regulatory, etc., that has taken place year over year or since the last time the ODDQ was completed. And this is helpful because it gives us a series on an annual basis of data points of changes at each investment manager that we have within our book. The initial and ongoing reviews are important to PRIM and both involve GIBS surveillance. We ask all of our investment managers if they are GIBS compliant upfront during the initial screening. And those that are, we continue to ask and seek that they complete an annual verification. This is done during the ODDQ process. Now, we want all of our investment managers to be GIBS compliant. And if they are not, we want to work with them to become GIBS compliant. Now, we don't necessarily require it for all asset classes, specifically in the alternatives where it's less common, but we do strongly prefer it and we do push for it. We find investment managers that are GIBS compliant is extremely beneficial because it enables us to easily compare the past performance with other investment managers. We have a good level of comfort in knowing that we are comparing apples to apples when looking at performance and comparing versus other similar strategy mandates with other investment managers. We believe that by investment managers being GIBS compliant, this provides a higher level and greater transparency, which we value deeply. We also believe it to be the gold standard. And really, why wouldn't we, as an institution like we are, want our investment managers to hold themselves to the gold standard? This is why we think it is important that we find a manager that we like from an investment perspective, and they aren't GIBS compliant, we can work with them to become GIBS compliant. We see this often, specifically in the emerging manager space, right? You find a great investment manager that has just removed itself from a larger institution, starting up its own investment firm, and they're very focused on just the front office side of things, and they're less focused on the back office or mid office side of things. This is where a lot of collaboration can take place, and we can really work with these managers on saying, well, if you want to get yourself to this institutional level, here are some things that you need to do, and becoming GIBS compliant is one of those. Now, this is a great segue into why did Mass Prim make the decision to become GIBS compliant? How did we get there? And detail out the road to compliance that we took. Next slide, please. Thank you. As I mentioned a moment ago, we have historically asked our investment managers, Mass Prim has historically asked our investment managers to be GIBS compliant. Yet our performance returns that we were reporting to our committees, to our boards, to our participating systems were not. Now, this seemed a bit hypocritical. If we're over here pointing that it's important for our investment managers to be GIBS compliant, yet we aren't ourselves, again, that comes off a little odd. And now, to be fair, and Simon touched on this a little bit, most of the disconnect was due to lack of awareness historically. Prim staff, our committees, and our board weren't really fully aware that an entity like Prim, an asset owner, could be GIBS compliant, or we were unaware of the steps and procedures that we needed to take to become GIBS compliant. The common perception was that GIPS was primarily for investment managers. Our executive director, Michael Trotsky, has always been heavily involved in the CFA. And, with his time there, he discovered that GIPS was indeed for asset owners and felt that this would be something worth pursuing and looking into further for PRIM. Now, firstly, it's really to practice what we preach, right? And that's where, if we're asking our investment managers to be GIPS compliant, it's a lot easier to have those conversations if we are GIPS compliant as well. Secondly, we want to give our committees and our boards and our participating systems the comfort that we hold ourselves to the gold standard as it relates to performance reporting, and that the GIPS standards is really the unifying standard globally for performance reporting. Now, Michael Trotsky saw it as an important project for Mass Prim and for us to kind of investigate this further. The process for determining if we could, how can we, what is needed, was fairly lengthy to start, and probably the most difficult part of the process overall. It first took selling the concept internally, selling the concept to our CIO, to our COO, to our CFO, and explaining why we felt it was important. What would it do for us going forward? Before we began, we wanted to verify that we were doing this under the correct definition. In GIPS, were we an investment manager or were we an asset owner? And this took some time to determine, given our rather complex structure as a firm. Now, to get further clarity, we did work with an outside consultant to help guide us. What is the best definition for us? Where do we really fit, within these definitions? And again, we ultimately did land with asset owner, which was expected, but we wanted, again, to be certain. That's why we reached out and worked with consultants. Additionally, we wanted to vet out what do we need to do up front to become GIPS compliant, and what do we need to do going forward? What type of controls were needed? What type of reporting was required? A lot of questions that we need to answer. What do we need to change, if anything, with how we were displaying our performance reporting? What do we need to create? Do we need to create new composites? Do we need to create new benchmarks? Do we need to represent new returns? So again, we worked with an outside consultant to help answer all these questions. What we ultimately found out for the must-haves, where we needed, and Ken alluded to a lot of these, we needed policies and procedures. This was really, again, to govern our GIPS reporting, as well as a GIPS report. And this was, again, formerly, prior to GIPS 2020, was known as the GIPS compliant presentation. And we needed to report the GIPS report annually to our committees, to our boards, and to our participating systems. As it relates to what would change with our reporting, we felt we were in good shape given our structure, and that was one total composite of all of our asset classes, kind of the roll-up, and that's what we intended to be GIPS compliant, which we call the total PRIT fund. Additionally, we have a large reputable third party calculating and tracking our performance monthly. That's what I was alluding to earlier, where we have the master custodian doing this on our behalf. We have very strong controls on making changes to all benchmarks and a solid documentation, footnotes of all changes that have made to our benchmarks historically. All of this led us to have comfort that from a reporting perspective, not much would need to change, though we wouldn't know for certain until we began the process. And ultimately began the verification. As soon as we got buy-in, and had a general idea in the process, solidified our definition, we next formed an internal team. It was really a team of one, which was myself, that would take on this project to become GIPS compliant. Now, the road to GIPS compliance for PRIM took time and patience. There was a lot involved, and we wanted to do this once and do it correctly. And hiring and working closely with a consultant was hugely important. I can't stress that enough, especially an entity like ours, where I was, mentioning how lean we were, and the limited resources that we have, and not to mention the day-to-day stuff. Adding a project like this was, it seemed very daunting. But then when we brought on an outside consultant to help guide and navigate us, looking back, that was very critical. Now, the consultant helped and guide and aid Prim as it relates to formatting and detailing out policies and procedures. What were the must-haves? If there was something that Prim wanted to put in there or put within our materials, it was a great soundboard to bounce ideas off of. Again, we found this extremely helpful looking back on. The consultant even helps on a going forward basis when we do our annual verification. The consultant will help kind of be an intermediary between Prim staff, our master custodian, and the independent verifier to help ensure and move the process along in a timely fashion. As I mentioned before, Prim had a good idea of that our data was in good shape. Our returns were already presented and time weighted. Our benchmarks were detailed and well documented, and our theory was confirmed when we went through our first verification. Nothing really had to change materially with how we reported our performance. So Prim adopted and became GIBS compliant in January of 2019 for our June 30, 2018 reporting period. Now, this was our first verification. It took about roughly a week to work with our independent verifier to get the verification. And on an annual basis, as I mentioned before, we have the independent verifier come in to verify our GIBS report on an annual basis, which we will then present to our investment committees, our board, as well as all of our participating systems that invest. When looking back on this, and even currently, when thinking about what were the benefits of GIBS, was this important? Why was it important? I tend to look toward our committee and our board, who ultimately we report to, as well as all those participating systems that invest with us, and we manage their assets. And the constant feedback that we receive of how great this is the real differentiator, right? How those bodies take further comfort and assurance in the performance returns that we are presenting, in knowing that they are GIBS compliant. And at the end of the day, that's all we really needed to hear. And this, this highlights the consistency, the reliability of information and credibility for the numbers that we are presenting and communicating. Next slide, please. All right, thanks. Lastly, I want to touch, on those asset owners out there that are looking to embark on this journey. What do you need, in my opinion? The first is to get the senior sponsorship, the buy-in from the top and those in charge, to help get the resources and to help promote this initiative internally. Secondly, determine dedicated resources to lead this project internally. Determine if there will be other resources internally or externally to help drive this project. Would you need a consultant? Would that be helpful? Would it add value? Or is this something that can really be done internally without a consultant? What is a rough idea of cost to implement initially? Again, our experience was that's where the most cost and effort went, was the initial onboarding stage, if you will. And then what are the ongoing costs to maintain? To have a solid understanding of all these items would be extremely helpful. And lastly, communication, ongoing communication. Communication to ensure that those receiving the GIBS report at the end of the day understand how powerful a resource this is. And that this is, again, as I mentioned, truly a gold standard. We partnered with the CFA on communication, a joint press release to get this message out. This is important for all those involved with the project internally. It shows that their hard work paid off, However, this is also important and powerful message to our committees, our boards, our participating systems, to continue to see PRIM's name in the headlines, leading the way and holding ourselves to the highest standard possible. Now, this is something I feel all asset managers can do, in my opinion. And as Ken went through, there are tremendous resources that are available now for asset owners to gain compliance. You know, to be honest, these weren't available several years ago when PRIM went down the path to become GIPS compliant. So I encourage all asset owners to take a deeper look at becoming GIPS compliant. I'm confident you'll find value in it as we have. That's it for my comments. You know, as mentioned, there will be a separate Q&A period at the end of today's session, and I'll gladly take questions then. Alternatively, if you don't get a chance or if your question isn't asked, feel free to reach out to me. I'm always here as a resource, you know, as a soundboard if you guys want to bounce some ideas off of me. But I'm happy to discuss, and thanks for the time.
Thank you, Matt. Thanks for your presentation. Really interesting to hear your views. Nicolas, if you want to start, thank you.
Hi, everyone. Thank you, Alejandro. Thank you, CFA Society, Mexico and Peru. And thank you, Melvin, for inviting me to this webinar to talk about GIPS and my experience and the experience at Santander Asset Management implementing GIPS compliance at a global level. Thanks also to previous panelists for their very interesting presentations. It's always very good to hear how other firms are implementing GIPS and getting to know how others are doing the same things we do. And it's true that from another perspective as asset owners, slightly different from what we do at Global Asset Manager. And finally, thanks to Ken for the introduction and for sharing many of the rules, the standards that we are going to apply. I will talk about some of them in the next few minutes. So please, Diego, if you can go to the next slide. So this is the agenda of my presentation. I want to spend not too much time on this brief overview about GIPS, but I think with Ken's presentation, well, he has already explained very good main points about GIPS. But then I will turn to explain some important aspects of the verification at some management, and then giving some insight about the impact and some views on how GIPS compliance could impact an organization like ours. Okay, so next slide, please. Bill. So, well, this is again talking about GIPS benefits, what GIPS compliance could give to a firm, to an asset manager. Well, from the firm point of view, well, gives you, as I mentioned here, the ability to compete. So it gives you, for the internal processes, you have homogeneity, you have consistency, you can be sure that you are calculating returns, performance, that you also have been able to classify and to monitor all the products you have. So it gives you consistency in the end of what you're doing internally. And of course, for the investors and clients, well, we've already heard that a lot of times, but it's absolutely true. Gives you transparency, competitive advantage, a lot of RFPs, requests being GIPS compliant. So from a firm's, from an asset manager point of view, it's really something you need to have. So it's absolutely mandatory if you really want to compete in the industry. Okay. Next slide, please. So again, some comments, few comments about GIPS, how we see that, how I see that. It's, well, again, I repeat, must have for most of the investment managers. You have here some facts about a lot of firms, of asset managers already compliant, and it's increasing time. In France, you've got this French Fund Association that was demanded and recommended, strongly recommended to be GIPS compliant. And in the UK, we have seen now some progress in by regulators about introducing GIPS and making this very, very important, right? We've also heard that it's true that, well, it's a self-control that you use, but so there's no that's not a law you have to comply with, but you can see that claiming false claims of compliance are being penalized in the US, and probably this is gonna be the same in many of the countries in the future. Okay, one of the problems we've found in the GIPS, or many people said that, well, GIPS was mainly focusing on institutional business, and sometimes, so that's something I think CFA addressed with the new 2020 standards. So now you have more standards and more flexibility for well, pool fund managers to comply and to use on a better way GIPS compliance. Okay, and well, finally, I would like to mention that, of course, the goal at Santander Asset Management, I think that should be the goal for many, if not all firms comply and that try to comply with GIPS standards, is to be verified by a third party, so that gives you the seal and makes you easier to go to any client, any prospective investor, and let them know that you are GIPS compliant. Okay. Next slide, please. So going back to Santander Asset Management, well, I'm the GIPS compliance officer at Santander Asset Management, so that means I'm responsible for supervising and monitoring compliance with GIPS at the global level. That means supervising the renewal of the existing compliance in the countries we already are compliant, and also to put in place the project to be compliant in the rest of the countries. Right now, we are already compliant in Spain, UK, Luxembourg, and Portugal in Europe, and in Latin, in Argentina, Chile, and Mexico. And we're trying to get the compliance in Brazil. Hope to have this between beginning of next year, probably. Okay. So that's saying that, you can see the numbers. So we have 50 years of experience in the industry. We are present in 10 different locations, and we have around 200 billion under management. Okay, so that means that we are a very global company with a lot of people, a lot of assets under management, and with a lot of locations. So that means that goes to the first, next slide, please. The first question you have to ask yourself when you want to, when a company like this want to become GIPS compliant, that do you have to do this at a global level or multi-local? So that you see here in the slide, but the main question, and how do you get there? That, well, we've been compliant. We began in Spain 2004. Well, following the trend in Spain about being GIPS compliant, so we jumped into the trend. We became compliant, and then 2014 we decided to adopt the GIPS standards at a more global level. So that means, well, the idea of becoming GIPS compliant for the whole company. Okay, what did that mean for us? And we can go then to the next slide, please. That means that we had at that point in time basically two options. Okay, or a question that we had to to address first was, are we going to do this for the whole company, or are we going to do this location by location? Okay, and how do you answer the question? And I think that's something that many global asset managers will have to decide or to look at. It's well, of course, you first need to look at the standards. Okay, and we know the standards say that recommend that to adopt the broadest definition you could adopt. Okay, but also on the other side, standards say that, well, if there is, or a firm can be defined as a distinct business unit. Okay, so that's first thing you will need to know is how do your company works. So do you have separate business units, or are you operating as a single entity? Okay, so that will define if you need to, or if you can, or if you want, depending, to be GIPS compliant in every one of your locations, or just get into one compliance for the whole company. Okay, in the case of Santander Asset Management, as I mentioned, we decided to be compliant in all our locations. Okay, because, well, as you see here, we are a holder company, and also each location operates as a distinct business unit. So here it was pretty much straightforward to decide what to do, but this could be something that many companies will have to decide first. And as I think Matthew mentioned also, it's definition of a firm is the first step you have to deal with when starting a compliance process. Okay, from our point of view, we have some benefits by doing this, by being compliant in each one of the locations. So from understanding, it gives you better connections with teams and clients locally. Okay, it's sometimes much easier to put all products you have in one location together, and then with that start to creating composites and all that kind of things. Also, if the structure of the company, of the firm changes, that structure gives you the opportunity to become or to maintain the compliance at a global level. This is third point is very, very important, that because sometimes complying is not really a matter of technical difficulties, but you need to involve a lot of different people from many different teams. So sometimes it's easier if you do that at local level, because you have the people with knowledge there, and if you put them on the same boat, you will have the opportunity to make this easier. Okay, and finally, same thing, you can have more visibility for GIPS standards if you do that at local level, because sometimes if you do that globally, person in one location would never know about it. So that makes that everybody in the company or in the location knows about the GIPS standards and the process and the project and all that kind of things. Okay. On the opposite side, well, of course, sometimes it's a little bit more complex because you have to be able to have people in each one of the locations. Many more people involved in the process than doing this just for one entity. You know, you need coordination. You need to know the difference between the countries. So sometimes, and you have to adapt the project to that differences. Okay, and of course, if you do this by location, you present smaller assets under management for in the composite. So that sometimes could pose some problems. But I think in the end, from my point of view, you have to decide if you can do that, of course, under the standards, and then decide what kind of compliance you want to achieve. Okay, so in our case, first big decision was to go for multi-local. Okay, and with that in mind, we started the process. Okay, so we can now go to the next slide. Diego? Okay, so let's talk now a little bit about what's the process, okay, of compliance, how we did that in the Santander Asset Management. Well, I think that's probably something that many firms will have in common. Okay, you first need to analyze, okay, what you have. So in some firms, probably as you mentioned, it's going to be very easy because most of the firms are already calculating returns in a Gibbs way, even if they don't know yet. Okay, but you need to assess this. You need to look at all your processes. You need to know if you are compliant and if you are doing the things under the Gibbs standards. Okay, so if you have current policies, you need to analyze them, and if you don't, you need to create them and go deep inside the evaluation process, reporting process. So you need to evaluate all those things. Okay, that's the first step in our Gibbs compliance process, and I guess it's going to be very similar in all firms. Okay, once you've been able to analyze what the processes you have, then you need to adapt this to the standards in case you need to make any change. Okay, and even if you don't have to adapt anything, you have to do something like creating the policy document under the Gibbs standards. Maybe you will also need to improve some operational valuation processes, and of course you need to know all products you have that will go under the universe of the firm. So of course you create the firm, the definition, and then any product matching the definition of the firm must be identified. So, and this is, believe me, probably one of the most difficult and time-consuming steps you have to do in the compliance process. Okay, sometimes it's not that easy. You have to involve a lot of people from different teams, and you have to double check that you are not missing any product. Okay, because that's really important and one of the keys to be compliant. Okay, and once you've done that, well, design criteria, procedures for definition, maintaining the composite. Okay, depending on the type of product you have, segregated account, broad or limited distribution pool funds. Depending on that, you can create one or more composites, or maybe no composites if you are only managing pool funds, broad distributed pool funds. Who knows? But you need to check all of this and be sure that you really know the firm, you know the products you have, and you know the investment strategy of each one of the products to be able to assign them to a composite strategy, etc. And then final step of the process, in the case you go to a verification, and as I mentioned before, something I think all firms should do. Well, you have to work on the verification. So that means first to hire a verifier, of course, but then work with the verifier in reviewing, calculation, portfolios, valuation, all that kind of things. So this is some kind of auditing part of the process. No, it's when the verifier asks you for providing the information that is behind the numbers you have in the report. Okay, and you have to be able to do this on time, and well, that means involving mainly sometimes back office, valuation department, all that kind of things. Okay, so that's well, I think that probably what most of the firms will do. That's how we do that at Santander Asset Management. Next slide, please. So how do you translate this this scenario into technical or in practice? Okay, so first, of course, defining the firms means you define the universe of products. You have to create a database of products. Of course, you need to know what products do you have, investment strategies, inception date, termination date, changes in benchmarks, because that will probably mean that there is a change in the investment strategy. That could mean that you have to, that this product should be or have moved from one composite to another. So you need to really have a very, very good database of the products you have in the firm. Okay, and of course, when you have all of this, you can then create the composites and then, well, I will not say create, well, create the composite. So with that, you will know which composite you need to create and which where to allocate each one of the portfolios. Okay. After that, you need, of course, to calculate the returns. Okay, this is critical. You have to do that following the standards. Probably you will use some kind of application. In our case, we have external and internal systems that allow us to calculate all returns, and because with that you will be able to create the composite returns, and in the end the presentations. That's the final report you want to have and to be able to provide to prospective investors or clients. About policy document, already said that, but you need to create a policy document with all these points in the policy document. So sometimes it's not that easy. You need to know very well the processes, so valuations, counting rules, all that kind of things that probably you need to you don't have sometimes in mind. So it's a hard work getting sometimes to have all this information, but you need to put this in the policy document. And then, as I mentioned before, verification, it's all about auditing the numbers you have in the left and explain these numbers to the verifier. Okay, so verifier will ask you for a lot of confirmations on, well, and you need to be able to provide the information. Okay, next slide, please. So once we talk about general process, how we do the verification and the compliance at Santander Management, I wanted to share with you a bit of the project, the story of Santander Management becoming GIPS compliant in all locations. So as you've seen in one of the first slides, we were already compliant in Spain when I joined the project. And then the idea was to become compliant in all the rest of locations. So of course, it was easy to start with Europe, but then we moved to Latin America with Mexico, Chile, Argentina, and probably next year Brazil. So that's that's how we've done this, and well, it's a very exciting project, and happy to have this completed by the middle of next year. I think if everything goes right and we don't find too many problems. And okay, next slide, please. So now that we've talked a little bit about what we've done at Santander Management, I just wanted to to give some insight about how I see GIPS compliance and how GIPS compliance it's good for us and how we use it. Okay, so as mentioned this before, well, it's required in many institutional mandates, but it's also a guarantee of best practices for clients and distributors. Internally, give you homogeneity in creating the presentation and in methodology. So I think Simon mentioned this before, that sometimes it's, if you need to decide or methodology to apply in evaluation and creating return from reports, you have GIPS. So you can apply GIPS and it's straight, but you can just tell person on the other side, okay, you just have to follow GIPS, and GIPS say that we do this like this, and that's how we're going to do this. Okay, it's a powerful marketing tool, and the importance keeps increasing worldwide. So this is going to be very, very important in the future. You can collaborate with the verifier and application that provides you the numbers. And well, it's a global trend, growing trend, so it's going to be increasing more and more, and you'll find this in countries that don't know GIPS right now, maybe, or are not so familiar with this. This is going to be growing exponentially. I'm pretty confident in the next few years. And well, then we can go to the next slide, please. So this is my last slide, and just wanted to share with you also how I see GIPS could be good, or why GIPS, how GIPS could be used from several different parts of the organization. Okay, so from a top management point of view, well, if you know that your company is GIPS compliant, you know, you could have confidence in the numbers, performance improvement, for example, and other teams could be providing you. So, you know, returns, you can be confident that they are calculated under the GIPS standards, so in a consistent way with the best practice. Okay, so that's the top management. So that gives you confidence in the numbers. For investments, well, investments many times, apart from attribution analysis, so the kind of things you really need to know which are the returns you're getting. No? Okay, so again here, well, you can have a lot of reports, and you know that the reports are all homogeneous, calculated in the same way with the same standards. So no differences between the different investment teams. So everyone receives or follows the same methodology. Okay, so that's, I think, it's a very, very important thing in an organization. And well, I've mentioned this already a few times. So it's for sales. Well, it's pretty much easy if you are GIPS compliant. Sometimes you don't have to face the problem of being pushed out of any process because you are not GIPS compliant. You cannot meet the RFPs, one of the first RFPs requests. Okay, and finally, for product, this is maybe something that, well, it's not so well known, but I think it's very, very good from a product department point of view, because as I mentioned before, one of the things you have to do is to create a product database to really, really know all the products you have in the firm, because you need that to create the composite and to be able to allocate all products to their corresponding strategy. So this gives you a point of order, of organization that maybe you could have, but maybe you don't. And so that's again something that makes GIPS compliant very, very good, not just for selling your products, but also for internal organization of the firm. Okay.
Thank you, Nicolas. I think we can start with a Q&A session. Maybe we can start with Nicolas, since we have fresh his presentation. And there's a couple of questions on particularly how are you organized internally to comply with GIPS? I mean, I think you touched on it on your presentation, and that you're leading the effort globally. But do you have a specific GIPS personnel in the local jurisdictions where you're implementing this, or are you using local resources that work on other things to also work on the GIPS implementation and the GIPS compliance going forward?
Exactly. So we don't have a specific and dedicated team GIPS team in all locations, would build on the local resources we have. Okay, so again, GIPS, it's many times it's a matter of asking questions to many different departments or teams within an organization. So because you need inputs from product, you need inputs from back office, you need input from risk and compliance departments, you need so we use resources, local resources in each one of the countries to access the information we need.
And when you're implementing GIPS in a new country, let's take the example of Brazil. How long does it, I mean, and with your previous experiences in Mexico and Argentina, Chile, how long has it normally taken Santander to start from zero and getting that country implemented and then verified?
Yeah, it depends. Depends a bit on the size of the country and how many products you could have there. It could take from, I would say, 3 months to 6 months, okay, to have all the information you need, all returns calculated, and then you have to go to the verifier, okay, and then it depends on the processes the verifier has and how many information do they need. But I would say something between 3 and 6 months, depending on how many resources you can get also on local terms, and the size and the number of portfolios, and not just the number of portfolios you have, but the different kind of portfolios you could have. Okay, it's not the same if you only have pool funds or if you also have segregated accounts, and also the more composites you have, the more difficult or more time you need to get the to get everything done, okay, before you can go to the verifier. But it's really important to say that as you need to send a notification form to CFA every year, so you have, in fact, you have for the renewal you have 6 months. Okay, you can start earlier to prepare all the stuff you need, but then since you close the year and you send the notification, you have 6 months to complete all the information. Okay, so sometimes this is this sometimes could be challenging depending on the size of the country. But that's why for Brazil we are already starting all the work now. So I'm creating the product database, analyzing the different portfolios they have, and then leaving all calculations and all that kind of things for the beginning of the year.
And is Brazil the only country that you're working on at the moment, or do you have plans to implement GIPS in any other jurisdictions?
Well, maybe in Poland in the future, but right now we're just working. The last one we have is Brazil. Let's see what happens with Poland. But well, the idea is to have GIPS in all locations. So sooner or later we try to do this in Poland.
And how are you prioritizing these countries? Why Brazil first and then Poland, and why did you start with the other Latin countries? Is it by size, or how are you thinking?
No, it's well, depends on how many resources we could have in each one of the countries, and in fact at the beginning we tried to start all of them together, okay, but then we finished first with one, and others took longer. Okay, so that's well, it's from that point of view, it's just we are just trying to since the beginning to do as many as possible beginning, and then the fact that Brazil came later just because it's true that there are a lot of products there, and taking a little bit more time to have it. Okay.
And in particular for LATAM, do you see that there has been a reaction at all in these markets where you're claiming compliance Mexico, Argentina, Chile. I mean, as we discussed at the beginning, in LATAM in particular, there's the uptake of GIPS has been growing, but still very slow, I would say. Have you seen any reactions there or increased awareness of prospective clients or fellow asset managers? Do you have any reactions on that front, Nico?
Yeah, a bit, but we've seen some increase in awareness, and in Mexico, for example, there's more interest, and I think there are more clients requesting this, and I think this is gonna spread to the rest of the countries there. I think because you have more and more external mandates in many of the countries, and then with that in mind, that would mean that sooner or later, many internal clients will request this. Okay, I think by imitation at least, but because they will be convinced of this.
Okay. Thanks for all your comments, Nicholas. And if we circle back to Simon and Matt, everything related to asset owners and in particular pension funds. I mean, from the perspective of pension plans and asset owner compliance, from what Ken was saying and from what Simon and Matt, from what you said, I mean, it seems that compliance for pension funds is, I mean, although that Cdpq has been compliant for a long time, the uptake also is relatively new. No? What has been your experiences in the US, Matt and Simon in Canada, with your fellow colleagues in other large pension funds, and what's driving asset owners, not only, as you were saying, Simon and Matt, not only that you demand external managers to comply with GIPS, but asset owners or pension funds actually implementing it themselves. What's the driving force behind that? I don't know if Simon, you want to start, and then we can hear Matt's views.
Sure. Yeah, I think that's a fair question, because for asset managers, the benefits are more straightforward. It's clearly a competitive advantage, and it's helping the selection process. But for asset owners, the question an asset owner, and in Canada, I know that's some of those asset owners, it's the case. The question is why become GIPS compliant since we're not selling our product? So I think the strategy here is really to communicate a bit more on the benefits for the asset owners, and it's not on the marketing side of thing, but there's a lot of discussion around ESG and governance, and it's just another way to add a level of confidence and a level of value that the performance is complete, that the process are solid and robust, and that the board and ultimately the beneficiaries can trust the numbers, and just not only the numbers, but the communication around performance. So it's not always the numbers, but in the GIPS report, it's how you frame those numbers to make sure that you represent correctly the information and the historical performance. So this is the value that we need to communicate to asset owners. And in Canada, Cdpq is maybe just one. There's maybe just us and maybe another one that is compliant. But I know that since there's more communication, like events like this one, we're doing the same in Canada, of course. And since the new GIPS are clearly more about asset owners and are showing more of the benefits for them, the rules and the requirements are getting more simple. There's less historical requirements on going back to your past historical performance and having to work on this to become GIPS compliant. So it's getting easier and easier to comply. So all of those, I think it's really helping the Canadian market of asset owners to take on this project, because I think everyone mentioned this, but of course it's going to be some resources at first. So human resources, you need to have some staff that understand the GIPS in your performance team and have allocated time to help the firm become compliant. But there's system requirements. So are your system able to take on this project? Can you generate the GIPS compliant report? So it's a bit of work at first, and there needs to be a clear business case. So that's the way, I think, to help adoption.
Yeah, and I would echo a lot of what Simon said. And again, we've discussed a lot of that here today. From my standpoint, this isn't a requirement. It's not a requirement for any of the U.S. pension plans to be GIPS compliant, but it's also kind of, I look at it as our fiduciary duty almost to be GIPS compliant in a way, because at the end of the day, we are managing assets, the public assets. And, there is a lot of, critique, and, we're under the microscope more than other institutions because we are a public plan. So having that transparency, having that highest level of standard, not just for performance reporting at GIPS, but for everything that we do, I think is critical. And we try to bring that into our business every day that we come in. So that's kind of the key element that I see. And to Simon's point, and Ken would probably have some more statistics on this, but you look back, trajectory maybe 6-7 years ago, U.S. plans that were GIPS compliant, maybe a handful. That number continues to elevate. Every year, more and more are finding this of value, as we have, as Cdpq has. And again, I think it's just strengthening the case, for GIPS.
Yeah, and as you were saying, Matt, in your presentation, also that it's not that it's required by the regulatory authorities, but authorities like the Security and Exchange Commission, they're not demanding that asset owners comply with GIPS, but they are overseeing the market, right? So if they see that someone is claiming compliance with GIPS and they're not actually doing it in reality, they could get fines and a reprimand if they're doing those type of actions.
Yeah, and that's something that we take into place when we are monitoring our investment managers or prospective investment managers. That's kind of our day-to-day regulatory legal monitoring that we do on a day-to-day basis to see if any of this stuff comes to light, to see if any of the Form ADVs kind of highlight any of these changes.
And I'm talking about regulation. Sorry, Ken, go ahead.
I was just going to echo what Matthew said and what you said, Alejandro. On the asset owner side, in addition to seeing more asset owners on the management side looking into compliance and wanting to get into compliance with the standards, we're seeing more interest from their oversight boards for the reasons that Matthew articulated, and even some cases from the regulatory side, the state legislature side, where some of the representatives are getting involved and they really want their public plans to follow industry standards and best practice, which means complying with the GIPS standards.
Yeah, thanks, Ken. The question that I was going to ask is, in terms of regulation, I think pension funds, at least in Mexico, there has been some comments regarding that maybe the GIPS standards clash with regulatory requirements for reporting investment performance for pension funds. Have you experienced something similar in your markets in the US and Canada, that the GIPS standards clash with local regulatory requirements for presenting results or presenting investment performance?
Not from my perspective, or I haven't even really heard of that much in the US. Like I said, even prior to us becoming GIPS compliant, we were reporting time weighted. We were reporting at a total consolidated, total fund level. We report this to our committee, our boards, to all entities that require it. and nothing really changed when we became GIPS compliant. When we went back, this was again before GIPS 2020, so we went back actually 10 years for our returns that we produced, and not one of the returns changed from what we were previously reporting. So we had kind of everything in place beforehand.
Yeah, I agree with what Matthew is saying here. And in Canada it's the same situation. It's not required by regulators, but I think, Alejandro, more and more it's getting to be known by board members, as more and more of them are CFA charter holders or are working closely with CFA Institute. And it's getting to be more and more known by beneficiaries as well. So those are key players in helping to start the compliance road. When the board members are asking, well, what is GIPS? We're hearing about those standards. We know firms that are compliant. Could we become compliant? Where are we not? So this is driving those projects, and then management takes notice of that. So that's one of the key drivers.
No, and I think we've seen that here with pension funds in Mexico. I think the whole issue with that, I believe personally that it's not necessarily that the GIPS standards contradict local requirements, because in fact, and Ken, you can probably complement this a little bit more, but that in the GIPS standards there are provisions to manage when local regulation is stricter than the GIPS standards, or the other way around. Always the more strict rules should prevail, and of course regulation has to have an upper hand in what the asset owners or asset managers present, and anything else could be presented as supplementary information. So there shouldn't be an issue there. I don't know if you agree with me, Ken, on that.
Oh, you're exactly right, Alejandro. I think a lot of this talk sometimes comes from people really not familiar with the GIPS standards, well intended, but just there needs to be an educational process. And many regulators look very favorably on the GIPS standards. And in fact, when they look to come out with regulation regarding investment performance, typically the first thing they do is take a look at the GIPS standards. And we have favorable relationships with many of the regulators and dialogues with them regarding technical issues and that type of thing. So we try to collaborate as much as possible.
Yeah, here in Mexico, we have many discussions with the local regulator for pension funds, CONSAP, and they're very aware, they're very supportive. And also, we've seen, as you were saying, Simon, many pension funds here are demanding on their diligence questionnaires. They're asking about GIPS, for all the sponsors and all the vehicles where they're investing. So it's starting to get a lot of awareness in the market. In fact, the few firms that comply with GIPS are Santander Asset Management here in Mexico. We have also Principal Financial Asset Management, and we have a real estate private equity firm called Vex Capital that they started the whole GIPS process because a pension fund was asking them if they were compliant or not, and they were not demanding obligatory that they needed to comply, but it was heavily asked for. So yeah, we're seeing an uptake and increased awareness here in these markets, and that's also one of the questions that we wanted to ask as well, is that both PREM and Cdpq have a big exposure to private equity and alternative investments, and you touched on it. I think, Simon, that you said that private equity, in particular in Canada, was probably, and hedge funds, not as up to speed as the rest of the early asset classes with GIPS. I think, as I was saying, we've seen that here in these Latin markets. That's where we're seeing adoption, in particular in those type of groups. How important is it for you at Cdpq and for you, Matt, at PREM, that the investment sponsors of of alternative vehicles are GIPS compliant?
Yeah, that's a good question, because adoption is not equal across asset classes, and for sure this is what we're looking for. But outside sometimes of balanced funds, equity funds, or fixed income funds, GIPS compliance is less frequent. So for sure, this is something we're looking for, but we're not requiring it because it would be very difficult in the selection process. But I really like what Matthew was saying about helping firms adopt once it's selected as a manager. And this is something this is something I think has a lot of value. But for us, it's the due diligence process is for sure it's easier with the GIPS adoption. We make sure to get for our own compliance. We make sure that even if an external fund, let's say private equity, is not GIPS compliant, we make sure that for our own compliance, we get a regular, fair evaluation of those funds. We do the same for our internal assets that we value in-house. We're also sending those external valuations on a regular basis to external appraisers to have a second thought about those second opinion on those valuations. We're audited on total valuation, so that really completes the requirement in regards to making sure that all of our assets are valued, and this is very important for GIPS.
So you're already getting them halfway there, right?
Exactly.
Yeah. Okay.
Yeah, and just to touch on that further, it's all about moving the needle, right? Especially when we talk about the private equity space. It's one of these things that we're not necessarily going to get, nor do we require, but we do want to ask. We do want to make it known that this is something that we are interested in, and to continue to put that out there for our GPs, that this is of interest, this is of importance for investors like us, and the more investors that are following and pushing forward that message, the more powerful it will be to create that change at the GP. If all the LPs are coming together and saying this is something that we would like to see, it's very hard for the GP to push back and say, no, this isn't of interest. But at the same time, there's no shortage of cash for these GPs out there. So, with the returns that they're having, it seems to be, at their discretion. But our theory is to move the needle as much as we can, to commonly align with LPs to present and bring forward this message.
Thanks for your views, Matt, Simon, Nico. I think we have one last question. I think it's for Ken. What countries in LATAM are GIPS sponsors, and what is the role of a GIPS sponsor?
Great question. So thanks for that. So the role of a GIPS standard sponsor is to help promote the standards in your particular country and region. And then we're looking for you to provide, you don't have to, but provide technical input into the development of the standards based upon what you're seeing in your particular country, because the global investment performance standards are a global standard, and we want to make sure it meets the needs not only for all asset classes, but regardless of where you are located. Early on in the presentation, we had a list of GIPS standard sponsors, which are comprised of over 60 not-for-profit organizations, and they're listed out by country or region, if you will, and there are currently over 40 countries and regions.
Thanks, Ken. And perhaps it would be a good idea, Ken, for you to comment on the upcoming GIPS conference that the CFA Institute is organizing.
Sure, thanks, Alejandro. So we do an annual conference. The last couple of years, obviously, it's been virtual. very highly attended conference. It's known in the investment performance world. Talk about performance topics, including the GIPS standards and other topics as well. So for example, this year we're talking about DDQs, ESG, and that type of thing. There's information available if you're interested in signing up on the GIPS website, gipsstandards.org. And the conference is on October 26th and 27th, and we hope to see everyone there.
Thank you, Ken. And as everybody said, we're going to share a version of this presentation that we've seen today with the rest of the group and all the attendees. Melvin, I think we're ready for your closing remarks, and I wish to thank everybody for their time.
And Alejandro, just a shout out to Melvin and CFA Society Peru for hosting us today. You guys did a great job.
Of course.
Thank you very much. Thank you very much, Ken, for your kind words. And thank you very much also, Nicolas, Alejandro, Simon, and Matthew. I think this has been a very important discussion, and basically for our assistants and potential GIPS standards sponsors in our region, your examples are very useful because the importance, but also it includes not only the asset management business, but also the asset owners. There are many efforts across the region, including the largest societies like Brazil, Mexico, Colombia, Peru, Chile, Argentina, Uruguay, working right now with local regulators and with the pension fund managers and the mutual fund industry. The ones that are operating on a regional basis, but also with the ones that are local based. And I believe that sooner than later, we will have more companies adopting GIPS for their standards, because all the advantages that you have mentioned, not only for your company, industry, but also for your clients, who are at the end the people that we serve as an industry. No? So I'm very happy for your presence and for your comment, and thank you also to our audience for me participating. At the Advocacy Council of the LATAM and Caribbean CFA Societies, we will share all this information with our partner societies. We have 13 societies that work together trying to create a better markets, a better capital markets across the region. And we will distribute all the information, the video of this webinar and the presentations to the our members, that in total we have more than 10,000 members in the region. So I believe that this will be very helpful, especially for the companies that are already aware of the needs to improve their internal processes and their performance presentation to the public. Thank you very much again, and Ken, thank you for having all this energy to continue collaborating with the region. It's very valuable to have a person like you dealing with this. And Alejandro, great moderation. Happy to be again in another webinar. And to our guests, I hope that with this new normal, we sooner than later will we meet in person too. Thank you very much.